welcome to the Factail Investment Podcast. We've got a big episode about real estate for you coming up. A little later on, I'm having my buddy Catherine Cashmore come on to give us an update on the market. So we're at the end of the first quarter of the year. She's going to tell us what's going on in the real estate market. And we thought we'd do that because some of the big banks have come out recently and said that the market's going to go down and rising interest rates are a problem. And that might worry you if you actually pay any attention to their garbage. Here I have a book called We Are Rent, Book 2 by Fred Harrison. You should read it. Why? Fred Harrison is the most knowledgeable person about the land market in the Western world. I've read all his books. He's been writing about land and the property cycle since 1983, and he's been scarily accurate in what he's been able to predict. So in the early 80s, he predicted the real estate downturn in the late 80s, early 90s. Then in 1997, he said the same thing will happen again in 2008 if we don't change things. And it happened again. We got him on, Catherine and I, for our readers in 2020, and he said property is going to go through the roof if the governments print so much money and prop it up with all the different stimulus packages. We put out the report saying so. Hardly anyone bought it. Nobody believed it. Fred was right. Property went through the roof and it can still go up. And he explains in part of this book why that is. Now, I should say that Fred doesn't necessarily, well, he definitely doesn't see rising property prices as a good thing, but he shows why that is. But if you're an investor, you've got to deal with the world as it is. So there's still plenty of opportunity in real estate, and that includes Australian real estate. So I got Catherine on to give us an update on what she's seeing on the ground and how you can take advantage of it if you want to get in the market. So here's Catherine Cashmore, who is a buyer's advocate, president of Prosper, which is a real estate organization for tax reform. And I shouldn't call it a real estate organization. It's a tax reform group. And she's also writes with me at Factail Media. So here she is, Catherine Cashmore. Welcome to another edition of the Factail Investment Podcast. And today we're having our first return guest, and it's my colleague and good friend, Catherine Cashmore. Catherine, how are you going?
Yeah, I'm doing well, thanks, Cal. How are you?
Very well. So the reason we've pulled you back is we're getting a lot of questions about real estate, as we always do here in Australia. From your perspective, and sorry, let me just backtrack a bit. We're having the big banks come out saying they expect the market to fall, or it's potential that it will fall. I've noticed on the stock market, a lot of the real estate stocks have come off the boil a little bit, like the financiers, and I'm thinking of there, and some of the other ones. Builders, for example, have come into a few tricky spots. You and I are both very positive on the real estate market. Do you think there's a bit of a mismatch between the general perception and what you see coming in the next 4 or 5 years?
Yeah, well, the banks have never been great, have they, on their forecasts? Let's face it. I mean, they were completely inaccurate during COVID. And then they first of all, the market was going to crash by 30%. And then as soon as they realized that their forecast wasn't working out, a little bit like a weather report, they looked out the window and the rain that they'd forecast actually looked like it was sunshine. They flipped those forecasts, and then we had them giving random forecasts about, we're going to see 10% over the next 3 years, or they were all underestimated anyway, the forecasts that were flipped. And yeah, so then we got it. Then the market started to take off. Everything seemed sunny, and then as soon as there were any hints of interest rate rises, as if interest rates are the only things that affect the property market, we saw a flip again. So I think Westpac had come out, and CBA, I think they've all come out and said to some extent or another there's going to be a fall in the market from 2022 into 2023, anywhere from 10% upwards. And yeah, it's just like, I don't know how much they pay the economists at the big banks, but yeah, I wish I got paid that for whatever they get paid to give, because our forecasts have been bang on accurate in CT&F since we went into 2020, and yeah, we really stuck by the forecast that we're given, and it's turned out to be accurate. And yeah, I think both of us would like to be on the wage of what they are, what the senior economists are.
So you and I did a recording last night for our paid subscribers, and some of the questions were centered around on where to focus within Australia. I think it's fair to say Sydney and Melbourne are moderating. So people listening here, where should they be looking?
Yeah, and that was another accurate forecast we made, because we said that Sydney and Melbourne would pull back. It would have like a 2-year run, 3-year run, and then it would pull back a little bit. Not so much as to go backwards in price, but just soften. And then, of course, the states and territories that are smaller by population, we always had forecasts for a big boom, and you're seeing that. Tassie's been going very well really since around 2015. Which which reminds me, I wasn't writing cycles, trends, and forecasts then, but I did a podcast for you back at that time.
Yes, which you can still go and listen to. If you're listening to this, it's still out there on the web.
Yeah, the Newman Show at that point. But and called Tasmania at that time. I actually thought it would have pulled up by now, but of course the COVID stuff has just rocketed it forward again. And so properties are flying in Tasmania, South Australia. Obviously, you've got the floods in Brisbane, which will affect those flooded areas, but it's a very different stage of the cycle than we were in when we had the last Brisbane floods in 2011. I mean, 2011 was a softer market. It was, we'd rocketed up to a peak in 2010, and then on the back of the first home buyer boost, and then 2011 through to around mid-2012, the markets went nowhere. And of course, in the first half of the cycle that we talk about in cycles, trends, and forecasts, the smaller states by population generally are pretty weak. They show very weak price growth, if any growth at all. Now, Brisbane obviously it's part of southeast Queensland, which is getting the lion's share of population growth. It's got very low vacancy rates. The property prices have rocketed ahead. So property that's not in those flooded areas is still performing pretty well. I don't see it's going to be majorly affected by the recent floods. But our pick has always been Western Australia, because of the commodity cycle and the commodity boom, which, well, you've certainly written a lot about it. But yeah, we have that picked down.
And I should say, when we talk a little bit about the big banks calling the market down, one thing that guys like Louis Christopher at SQM are going around saying, rents are exploding all over the country, right?
Yeah. Regional Australia is basically full up. There's no more accommodation available. I mean, the rent's pretty much sitting on zero in many, many areas. But even in the capital cities, you've got rents hovering around 1%. I know myself in Perth, because I've done a little bit of buying over there, and it's a really difficult market to get in for rentals. But the property market is turning over very well as well. I mean, properties will come onto they'll be advertised on the Thursday prior to the weekend opens. And then after the first open at the weekend, they're gone. Like, offers are already on the table. So, all of that is the indicators. And this is why it gets so confusing when you read the big banks forecasts, because you just wonder what they're looking at and, how they can be so wrong. But all the indicators on the ground for Perth just look extremely bullish. You've got, as you said, rising rents, which always feeds into rising prices because the earnings of the land are increasing. You've got record low vacancy rates. Your stock on market is still very tight. The turnover, the time that the stock is on the market is very short. So days on market, as I said, properties come off, they go off very quickly, come on, they go off very quickly. And then you've got everything else that's feeding into the economy. So, in regard to Perth, obviously it's benefiting from the mining boom, but there's also a shortage of workers in that area, and there's wage rises. They've just opened the gates for immigration. McGowan is spending millions on attracting as many skilled migrants as possible. Then there's infrastructure spending that's happening. And yeah, so I mean, just to look at interest rates alone and say, well, a marginal shift in rates is going to pop we've reached the peak and the property market's going to plummet down 10, anywhere between 10 and 20% is difficult to conceive.
Yeah, absolutely. And again, we talked about last night how there's this constant thing in the mainstream press about focusing on interest rates. But just so the the people that do worry about interest rates, do you see a sharp rise in those, or do you think they'll stay relatively modest as they have been recently?
Yeah, well, as you know, because we've really had quite a bit to say about interest rates as well, and that is that you always get a marginal rise in interest rates when when the in the second half of the cycle, it's expected. So a rise in interest rates, or a marginal shift in interest rates, wouldn't affect the property market significantly. It does, make people a little bit nervous. Obviously, it reduces borrowing costs for a number of people, so it can have an effect on softening the market. But generally, when you look back at interest rate rises, as the interest rates rise, property prices rise historically. It's it's not a case that interest rates rise and then property prices, fall backwards. It's just that's generally doesn't happen until you get to the end of the cycle and you see very sharp and frequent increases in interest rates, until it gets to the point where through the property speculation, the productive sectors of the economy get eroded away through the period, and then that finally the interest rate rises, push the debt above people's ability to pay. But
just let me jump in there. I'm assuming that if you're an investor, you're looking, say, in Perth, the rising rents would probably cover the cost of whatever the modest increases in interest rates, wouldn't it?
Well, right now, if you get into Perth Market, and this is probably another reason why I was saying it's difficult to conceive it just falling back, is that already when you get in, the properties are positively geared in many circumstances, depending on what your borrowing capacity is. So, and obviously in an inflationary environment where you've got population growth going into a market that's already saturated, that hasn't got any accommodation available, and you can't build out accommodation quick enough to account for the shift in population, then absolutely you would expect that to continue.
All right. So if someone's listening to this, we're putting forward the case that there's still lots of opportunity in the real estate market if you can get the financing and go. Maybe look at Western Australia if you are willing to go out of state, if you're not from Western Australia. What are the types of properties that you would suggest someone look at?
It's really what we always talk about. I mean, obviously, if you're just looking to maximize your capital growth, then the thing that you've got to go for is something with a good land component. I always talk about, land is worth what it's zoned. So it's got to be a land that is, land that's zoned for subdivision, a property that you can subdivide into 4, averse to a block of land that you can subdivide into 2. The one that you can subdivide into 4 is going to be worth more on the market. So those areas, and Perth is a little bit behind in its development cycle. Just to sort of say this, there's still suburbs where there's just predominantly, just suburban housing, where there's not been a lot of subdivisions. But in the eastern states, where there have been a lot of subdivisions, getting into those suburbs where there's an increasing number of blocks that are being split up, and you're buying a block that hasn't been split up, you are by definition buying something that is reducing in supply, because obviously as the population growth continues, as prices continue to go up and developers see that they can make a profit, then they're moving in to develop the land. And, like I said, the unbroken blocks therefore become more valuable and more scarce as the development cycle progresses. But out of all the stats, that you get, when you look back at the core logic, medium rises of houses compared to units, and by units I mean anything that is on a subdivided plot of land. So it could be a townhouse, it could be a villa unit, it could be an apartment. Houses have always outperformed. And so by that, I would say, the older suburban house, maximize the land component, subdivided block of land in a decent location in an established suburb that is already built out and well facilitated. That should really prove the best property that you can buy to give you that growth in your portfolio. Then obviously, as you build up your portfolio and you want to increase your cash flow, you can divert from that and look at other options. But that's always my advice for maximizing growth.
Okay. I'm just trying to think here, because we're so immersed in what's going on in the real estate market. Sometimes it's hard to separate yourself from, how people view things from outside the little bubble that we live in, if you like. We had a question last night actually talking about a guy who was being pitched in Dubai. Interesting enough, I assume at this stage in the cycle, are we going to see more spruikers, in quotation marks, come out and push, trying to monetize the property cycle in speculative ways, if you like?
Yeah, that was an interesting question last night. So this is somebody that was getting emails and that was saying, oh, buy in Dubai and your yields are 8%. And obviously we saw a spat of that happen in the US. So after the 2008, in the first half of this cycle, there were a lot of US property spruikers saying, come on, get into this market because the prices are now really good and the yields are great, and so it always gets very tempting because the real estate looks a lot cheaper than it does here. I shared a story last night about a US investor that I've had quite a few dealings with who did purchase in Dubai actually a few years ago. And that was fine. He bought an apartment, but he never got the title to that apartment. It was never exchanged as it is here. He never had a title to it, which meant that he couldn't sell it. He wanted to renovate it. It was never legally his without the title. And he went through a long, drawn-out battle of years in order to resolve that problem, and finally did. But it was an extremely stressful period. So there's always a warning around, going into areas where you're not familiar with the legislation and you're not familiar with the, you're getting pulled in by someone who's obviously spruiking and getting a cut in commission from you purchasing there, but you just don't have any independent advice about the location. So whilst I'm not against investing overseas, I think it can be a very successful plan, particularly if you are searching for yield. There's all sorts of risks that are applied to it. So you need to be pretty careful. But yeah, it's totally what you would expect at this point, because as we were saying last night, people are wondering where to put their money. And it's almost a no-brainer in some sense, when you're getting a better yield from property than you are from the bank.
Yeah, it's funny actually, because ASIC just came out and has said that they want to crack down on what they call finfluencers, people on like Twitter and that talk about the share market and that. They never seem, I say they, as in the government authorities, never seem to be as hot on the property side of things as they are on the share market side of things. But anyway, that's just an observation. I also saw in the paper this morning, constantly trotted out is the stories about the first home buyers. So to somebody who's listening to this and they go, well, just how expensive can housing get when, people have to save for 10 years or whatever it is to get on the ladder? Surely it has to stop now. What do you tell people if they come to you as a client, for example?
Yeah, I mean, I really sympathise with that. As you know, like I do a lot of work with Prosper Australia, to work on legislation to try and stop the cycle of boom and bust in the housing market, and to try and give affordable options for people and secure accommodation for people. So I think before people get into the market, they always feel a little bit sour about, prices are going up. We're just going to sit back and wait for the market to crash. And I can tell you, I had a lot of buyers that came on, a lot of first home buyers actually that came on in 2019 after the 2018 downturn because of the Royal Commission into the banks, where the market slid back. I think it was around, it was median price of 10%, sort of slid back. It was a really steep downturn that we hadn't experienced for a long time. And first home buyers were kind of sitting on the sidewalk waiting for prices to continue to go down. It was like, this is the crash we've been waiting for so long. And because as soon as prices started to rocket up in 2019, they just kind of flooded back into the market thinking, oh, well, look, it's not going to crash. We better get in now. And it was too late. Understanding the cycle, understanding the property cycle is the greatest gift that you can have. Not because it's a fantastic thing for the economy. It really isn't. Rising land prices, buoyed on by speculation, are really the worst thing that you can do to the economy, because at some point it's going to unravel. And you are creating a bigger gap between the rich and poor, and the landowners and the rentiers and the renters. I can put it like that. So, but unfortunately, that's the system that we're caught up in. So everybody can say, well, we really hate property investors. It's one of the things that I hear from first home buyers very commonly. They watch all the spruikers. They hate real estate agents with an absolute passion. They just see them all as the sharks that are out there. And yeah, until they get to the point where they just realize that the market, that the crash that they've been waiting for hasn't happened, and then they got to get back into the market. Now, I'm not saying the market's never going to crash. Obviously, that's what we talk, this is the whole point of analyzing what the land cycle is, so that you understand when it is going to have that downturn. So that's obviously what we write about. So that's the first thing. But the second thing is that once you get into the housing market, that psychology completely flips, because nobody wants to buy a property where the price is going backwards. So no one, when first home buyers finally do get into the market, unfortunately, they get caught up in the whole investment mindset themselves, and joining the party where they're seeing their property price rise and their wealth increase. So, I mean, my advice right now at this stage is, prices are high, and yes, they're going to go higher. And there's a lot of reasons for that, which obviously we write about, not just in the rising rents and the infrastructure spend and the home buyer grants and all of those things that you see, but also because of the technological revolution, the money that's being made, in digital tech, and we talked about crypto and those gains and those winnings being pumped into the property market. So there's a lot of drivers to this that are going to keep the cycle forging forward until that peak that we're talking about, which will come later in this decade. So my advice to a first home buyer is, unfortunately, you can't look upon a house as a home in this country. You've got to look upon it as an investment. You've got to get your head out and do it accordingly. You don't have to like it, but unfortunately, policy dictates that pathway for all of us.
Yes, it's an insane system, but we all get on this merry-go-round, and everybody tries to keep it spinning until it won't anymore. You wear two hats. So you write cycles, trends, and forecasts, where you're giving your broad overview of what's going on in the real estate market, but you're also a buyer's advocate, where you're working directly with clients. Do you want to talk a little bit about that? And if someone's interested, if they're looking for a house or an investor, how you go about doing what you do there?
Yeah, absolutely. I mean, all I can say, a buyer advocate, a good buyer advocate, really is your best friend in this market, because it's there to analyze the good and the bad about property. It's there to prevent you overspending on crap property that's not going to go anywhere, right? That's going to land you in trouble. It's there to advise you where to buy and what to buy. And, my whole business really runs on a tailored service for people that come through the door. So, there's people that come through and they want you to do absolutely everything for them. They've got a budget and they want you to go out and do the whole search process and the assessment and, negotiating on a property. And obviously that's very beneficial. But there's also people that come in and they just want a little bit of advice, or somebody that comes in and, they're searching for a home and they just want your help in negotiating. But what I can say is everything that I do with buyers is to really give them as much knowledge as I'm able through the experience that I've got, obviously not just working as a buyer advocate, but also writing about property cycles and the land cycle and how the stock market fits in with that. But and also the work that I do at Prosper Australia to do with tax reform and how that affects the housing market. So I work very closely with clients to, really do my best to find them find them a way into the market, to the right property for the right price that is going to perform as well as it can, and to tailor those services accordingly. But really, as I said, a buyer advocate should be your best friend in a market where you are getting, like we said, receiving emails that are spruiking, buy here, buy there. You're dealing with real estate agents that are working primarily for the vendor. That means that they are never, ever, ever going to be helpful to you in the buying situation outside of their role of trying to get the highest price for the vendor. So you can hate on them as much as you like, for the underquoting, which is legally allowed, even though they try and crack down on underquoting. There are many loopholes in the law that allow agents to legally underquote, and they do. And that leads buyers into this roundabout where they spend months and months looking for a property. They renewing their pre-approvals, not getting into the market, and then watching prices rise in the interim because they've been led on this merry-go-round as to targeting properties that they can't really afford, or that aren't good for them in the first place, or that have pitfalls and problems that when they eventually do purchase, they've ended up with something that's not going to perform well and they don't particularly like. So, yeah, anybody that does want advice, you're welcome to reach out, contact me. I always try and give us, a little bit of an indication of a little bit of help just off the bat. So, yeah.
And how are you going in terms with your recent clients in terms of negotiations? I know you sort of say sometimes there's scope to work the price down depending on the psychology of the market at the time.
Yeah, 100%. Really in every market there is. I think that when you work as a buyer in the market and you're negotiating all the time, you get great contacts with agents, and so you get used to working with the agents, and you cut through all of the spruik that most buyers get. So there's times where I do get offered properties exclusively where other buyers haven't seen them, and I'm able to move on a property before anybody else has been through. And obviously, I've been working in the real estate industry for a long time now, but I didn't start off as a buyer advocate. I actually started off in the sales environment, so I'm very aware of how the tricks of the trade work and how to negotiate the best price. It doesn't always mean we can knock 100 grand off the price, but there's a vendor behind every house that usually is a little bit savvy themselves on what property's worth. But certainly the value in the buying side is in the negotiation and understanding the tricks of the trade. So, and it's different by state. So there's some states where you do have to move very quickly. The Eastern Board, the states, particularly Melbourne and Sydney, the agents will run you up against other buyers and shop the offers around and open you up for gazumping and all of those tricks that buyers get very upset about, and they run and contact Consumer Affairs, and unfortunately absolutely nothing's done about it, and they spend a lot of money and time chasing after properties. Like I said, they get a building inspection and spend money on it, and then unfortunately miss out to what goes on the West Coast, which is a much lazier market in that sense, as the offers don't get shopped around as much, but the market moves very quickly, just as I said. So understanding, how to negotiate in any state or territory and how to move on property and is really key. It is a very important part of the process. So sometimes we can do really good deals. And in markets we have done. 2018, I was writing, around in 2018, because obviously I knew the cycle. I wasn't, I knew that property wasn't going to crash at that point. But any market where you suddenly get a little bit of favorable negotiation conditions in a market where you're confident that we've not reached the peak of the overall cycle, as in the peak before a major downturn, then that's a market if you're looking to buy, it's a market to move in on, because it's certainly better, negotiating in a 2018 market where things are going to recover as they did into 2019, or even in Melbourne now, where we've got a little bit more stock on the market and it's just taken that edge of where we were last year because people are moving out of Melbourne. It doesn't mean that Melbourne's down on the ground. We're going to get immigration. It's not going to kick up in a heartbeat, but there's going to be things that can assist Melbourne's economy to recover over the years. So moving in on a market where the negotiation conditions are good is a favourable thing to do. Otherwise, it can be a very painful roller coaster like experience.
All righty, beauty. Well, we'll leave it there. I just wanted to get you on to do a short update on the real estate market so we can sort of keep tabs on it for everybody. So hopefully we can do it about every quarter. And as you said, if anybody wants to go deeper or whatever, they can give you a call, follow you on Twitter, or sign up to do what we do with Cycles, Trends and Forecasts. So that's a publication where you do the property side and then I do the related stocks on there. So we're early on into the year, so plenty more action to come as far as the property cycle goes.
Absolutely. And definitely they should sign up to Cycles, Trends and Forecasts, because I think that the information that we give in there really is valuable to understanding how and why the cycle works. So it's like a big roadmap that gives a little bit of confidence to those people that are maybe a little bit nervous about getting into the market or don't understand how the stock market works.
Yes.
The opportunities that are available.
I'm going to do a bit of shameless boasting here. You saw that letter too, where the couple had bought a new car from some of the recommendations that we made. So that was pretty cool. So
it was pretty cool. Yeah, I mean, we put a lot of effort into our work. Yeah, so it's great to get that feedback. When you get people that write in and they say, well, we listen to you and yeah, we're doing well. And yeah, it's always good. It's great to hear.
Cool.
Yeah.
All right, mate. We'll do it again soon.
All right. Talk to you soon.
Ciao.
Thanks, Cal.